Hi there, and welcome to Listen to the Market for February 29. Of the 12 L.I.V.E setups, there are 6 that require the knowledge of fluid movements. Fluid movements is a concept I came up with to identify clearly the beginning of a movement and the end of a movement, taking into account sometimes the seemingly spurious price action that takes place in the middle of a movement itself. So fluid movement is required for 6 of the 12 setups. Yesterday's price action provided one of the 12, being a 3S sell. A 3S, whether it's a buy or a sell, also requires a timing tool. So it's got a higher bar of entry. It's not enough just to have the setup there, but a timing tool is required as well. Let's go through it step by step to show you what was there and how you could have taken advantage of it. First things first, the previous day's high, the previous day's lows are marked. Next step of the process again is looking at the previous day to see what the message was for the following day, i.e. for the 29th. Well, the message yet again, after 2 strikeouts, was expect a larger range. The next part of the message was the sell side is the dominant side, so favouring the sells. So Wednesday the market opened, flirted with Tuesday's highs. There were a couple of little AA setups in there, nothing to write home about. And then right on the bell, the closing bell, 2 AM my time, a 3S sell came along on the 60-minute, and lo and behold, practical nature of the markets, also there on the 30-minute, complete with a sell timing tool. Ditto on the 15. So the 3 clay pigeons lined up. There was a 3S sell on the 60-minute, also a 3S sell on the 30-minute, and the 15, your action points were saying, okay, enter at the low there, I sell at the high there. Entry was achieved with a vengeance, the ISL was not threatened, market closed way below the previous spike lows, down in through there on the 60-minute chart. So by now your trail would have gone from initial to a trail to a locking up at least 1.5 hour on that. Rolling out to the 30-minute if possible. Well, maybe splitting, part there, part at break even. That's again an individual flexible decision to be made before you start trading. Lower high yet again on the 15-minute, which means the 30-minute can kick in as a roll up. The 60-minute by now is complete, and that's the 60-minute view. So clearly you can see how well the 3S caught the top in through there on the 30-minute, and your action points in terms of the 15-minute entry, and then the trail, and then rolling across to the 30-minute. Following it through purely on the 30-minute basis, very laid back, wee hours of the morning, and you get stopped out through there. So on a very simple approach basis, getting on the 15, getting out on the 30, there was 4R to be had. On the 60-minute trail, one would have had to be around for a little bit longer, a few more hours, and in my eyes the question always is that justifiable? And we're still in that campaign and stopped out now. The return there, getting in on the 15, having rolled up to the 60, was 6R, all the way down through there. Now yesterday was one of those bonus days as well, where about 10 to 15% of the time, courtesy of the L.I.V.E money management rules, there is an opportunity to double the R return without increasing your R risk. Now this knowledge obviously remains between you, me and the gatepost and the L.I.V.E students, and that means, summing it up, that instead of a 4R return, there was a possible 8R return on the table. Instead of a 6R return getting out on the hourly bar, there was a 12R return. That was possible. So you're beginning to see that by being flexible in how you manage your position, your campaign, 1, the returns are there, and 2, the returns can be significantly improved. That's it from me. Thank you. Over and out.